Hello, everybody. This Wednesday, and today we had Jerome Powell talk, and we had a ton of other stuff happen around labor market, interest rates, debt, AI, the Singularity, and so much more. And I'm going to try to weave all of that into a tapestry today, which covers everything: macro, a little bit of crypto, a little bit of AI and disruption, and where we are, where we're going, and is it a bubble? Because people are freaked out. And if you had things like Nvidia, and in fact, one of the best performing stocks over the last 365 days is Tesla. Not even Nvidia, but Nvidia has been on a rampage of late, and also since 2022. But we're going to talk: can this continue? That's the real question. And what's happening with macro and some traditional indicators? And has everything changed? Are all the models broken, as they say? That's what I'm going to try to get to. So big thank you to Shoni and Nvidia and everybody out there. K8, Angle Blacks, and Ragnar. Let's go. Make this snappy. But I did warn you, this one is kind of a little bit tricky. We're going to concentrate, my friends, and not financial advice. And a shout out to everybody on Patreon too. This is from Satstacular. I like that. Grateful to have a seat on the Patreon bus. Keep that NFA, KPM alive and kicking. NFA is not financial advice, and KPM is knowledge per minute. Thank you. First of all, 54% of experts say, yes, there is an AI bubble. There's a huge surge, a huge boom, and people can't wrap their heads around it. And a lot of people, including myself, lived and traded through the dot-com bust. I became a bear in 2020, just in the nick of time, because the valuations were extreme. But people still have that PTSD and that hangover. But we're going to dig more into this, if it's a bubble or not. Second of all, shout out to Warren Buffett. He had this thing called the Warren Buffett indicator, and now it's currently at 225.3%, and that surpasses all record highs in the past. That is the blue line you're looking at there. It's the US market cap to GDP. When the market cap of stocks is multiples the size of GDP, that means we are in bubblicious territory. And this Buffett indicator says we are significantly overvalued. Everything is broken, or are we all going to die? According to his metric, yes, we're going to crash and burn like we've never seen before. But I would argue all the models are broken, and this does not take into account the fact that AI creates abundance. We'll get more on that later. A couple of reasons why. Maybe his timeless metric is busted. As I mentioned, it is the comparing the stock market to the country's GDP. He always described it for 50 years, the best single measure of whether or not we are bubblicious or not. And historically, we were between 75% to 90%. Now we're 225. And it has predicted every major market crash, including the 1929 depression, dot-com bust, etc., financial crisis. So it worked in the past. Will it work in the future? That's the million-dollar question. And we'll try to get to the bottom of that too. And shout out to Warren Buffett. Unfortunately, he got downgraded because he avoids AI stocks. He's sticking to value, and he's nearly 40% cash. During what is the biggest revolution, I always call it like an AI asteroid hitting the planet and just explodes money everywhere. And you can see that with the action of Nvidia that hit 5 trillion today. So that's kind of some of what we're going to touch on. And yeah, maybe, as Sailor says, all your models are broken. But there are some other alarming statistics. This is the Shiller CAPE formula. It's currently at 41.18. It was at 41.07 earlier this morning. And this is the second highest level ever recorded, trailing only, once again, enter the 1999.com peak. Boom. We all blew up after that. But historical data shows a strong negative correlation between CAPE levels and subsequent decades of low or negative real stock market return. So all the TradFi guys are looking at these things, the Shiller CAPE and the Warren Buffett indicator, and they are like pooping their pants. I hate to say that. And there's other signs as well that things are not rosy out there. First of all, this is the labor market creeping up. I put a little red arrow over the action. You can pull up your own trading view unemployment law from the BLS, which is BS. But anyway, the point is labor is creeping up. That big spike there was C19 when everything shut down. But we're at the highest level since like 19 or 2018 or something. It's going way back. So things are not pretty. If you pull out the C19 aberration as well. And we've heard tremendously sad stories of large amounts of layoffs happen just over the last couple of days. You have 48,000 people, and these are white collar workers, by the way. These aren't people delivering packages at UPS. Amazon, 30,000. Intel, 24,000, and on and on. It's all across the board. It's all industries, whether you make food or you deliver packages or you're in social networks or you're a consulting firm. It's everywhere, and it's hitting white collar jobs hard, really hard. And we've been ringing the alarm on this since late 2022 when ChatGPT came out, because I personally believe AI has a huge impact in this. Other people, shout out to David Sachs and Chamath, they think it's all, no, it's not related to AI. No, not at all. But when you listen to what these companies are doing and why they're doing it, it's pointing the finger at AI. No ifs, ands, or buts. Even the Wall Street Journal, which sometimes says silly things, but they say white-collar jobs are vanishing as AI starts to bite. Layoffs at companies ranging from Amazon to Target are sending young and inexperienced workers alike into an unwelcoming market. So shout out to all the young people who are managing your own future, your own destiny, and investing. That is so important. The best step you can possibly take. But depending on working at Target or something, do something different. And Powell is confused again. He spoke today about a whole bunch of different stuff. He said the reason that the new job numbers are dropping is because the supply of workers is falling, due to the immigration shutdown, And that's the exact opposite of what he said a year ago. I don't think he has a clue. Many people don't. He's been wrong and late all the time. Now he looks more and more bewildered every single day. He also said QT is ending December 1st, which is code for QE, which means money printing, which is good. We had the second rate cut this year so far today, which is good. And then he said, no rate cuts in December, maybe not. But you can't kind of do no rate cuts and then do QE. In other words, we will not cut rates, but we will cut rates. Total PSYOP experience. Very bizarre. And we also have some weird stuff happening with the VIX. We are looking at very low historical levels of volatility, and this signals complacency. They're currently at around 17. It was actually 15.73 yesterday, and that's a very low level compared to what we've seen before major crashes in the past. Normally, things gradually spike up. You see all the historical stuff, 2007, C19. We had global financial crisis. We had two big bumps there. We had a little bit of a tariff scare. By the way, it's mad. I've never put the volatility index on the ATR model, but it works really well. So anybody who wants to trade VIX, that's how you do it. Anyway, side note, not financial advice, but it's bizarre how predictable it is. But that means everything is calm and relaxed, just like volatility in Bitcoin, very quiet. What's going on? It's all very confusing. And if you ask ING, they say all is fine. We continue to see opportunity because ultimately, AI bubble or not, it boils down to real dollars being spent on real capex with a very long runway of funding ahead. Yes, there are literally trillions flowing into AI. Trillions, not billions, not hundreds of billions, trillions. Building out stuff that takes a long time, big, heavy commitment, and there's no lack of supply of money coming from the Mag 7 and other players. Now, let's talk about bubbles. This is Nvidia, which literally just broke $5 trillion market cap today. A couple of weeks ago, it broke $4 trillion. I mean, anybody who's holding this is kind of the wealth effect. This is why you have to have these assets, because you get a little piece of Nvidia back in 2022, even 100 shares. That is after the 24 stock split and everything. It's life-changing. It's completely bonkers. Now we're above 5 trillion, but according to GF, you can see here the fair value is $229.74. Currently, when I check out the price live, Nvidia is trading at, where is it? Where's the puppy? Just sort of price. At $207. So we're literally $22 under fair value. It was trading at a P of 30 the other day too, which is crazy. Might be a little higher now that it's exploded in price. But again, that is half the PE of Walmart, which might suffer a little bit of a hit from food stamps being cut, because 25% of Walmart sales comes from food stamps, which I just learned this week as well. Mad, which all ties into the rest of the story that's coming. We'll get back to that in a second. And just to talk about Bitcoin too very briefly, Nvidia market cap is now 2.33 times the size of Bitcoin. And you think Bitcoin's a bubble when Nvidia is not a bubble? And Nvidia is like 2.33 times the biggest monetary asset on the planet. Well, unless you think gold can be used as money, but I don't believe it can. But anyway, more news. The Finkster. Shout out to Larry Fink. Hope he doesn't mind me calling him the Finkster. I've been calling him the Finkster for 10 years now. I think some of the investments that we've seen so far is not on AI. It's more on cloud and the power of cloud. So I don't believe this is a bubble, but I believe this is capital that in most cases is going to be well spent. Yes, it's not like a telco build out that we saw in the late 90s, but that ultimately was used too. They just overbuilt the infra. But now we know there's absolutely insane demand for compute, and it cannot be satisfied. And you can see that from things like you can only create a 5-second video. You can't create a 90-minute video because there's not enough compute around the world. So again, demand is going to be there. So let's try to put these two things together and synthesize some type of answer. This is the great debate. Okay, is there an AI bubble? 54% of investors believe AI. There is a bubble. By the way, if you listen to the crowd, you'll lose. Always blaze your own trail. The crowd is always wrong. Okay, so that's the first little indicator there. Second, optimists argue AI's transformative potential justifies current valuations. Yes. If you're thinking about going to law school today, and I've been saying this for years as well, don't. Okay? Don't. Do something else. AI is your lawyer for free, or your team of lawyers across every specialty. I don't want to throw a cold blanket on people. Maybe you want to go to university for the experience or learn from others or learn the discipline of law and then leverage AI to use it. Yes, if you're one of those people, yes, you can benefit. But make sure you're in an Ivy League school as well. And Nvidia's stock rally symbolized AI hype, but there is no valuation concern as far as I'm concerned. And the market's sentiment is sharply divided between skepticism and innovation. Nobody knows which way is up. I do, because I look at the data. I think we have a long way to go. Now, the labor market is unfortunately a different situation. It is steady at 4.2%, but the BLS data is weird. There's a ton of layoffs happening, white collar being hit hard. Jobs openings are being cut. I think it was Target cut 8,000 job openings that they had online, just turn them all off. And consumer confidence has dropped to a 6-month low due to job uncertainty. And AI-driven productivity promises clash with real-world labor. Again, there will be a revolution because of this in 5 years. People will be very, very upset unless they get all the abundance in their hands, which some people believe will be possible too. You know, the pie will get bigger. There'll be money dropping from the heavens for everybody, and maybe that'll make everybody happy. But Howard Marks chimes in. He said as well, back to bubbles, the main ingredient in bubbles is psychological excess. There's no such thing as a price too high, and I don't detect that level of mania at this time. So I've not put a bubble label on this incident. Now, this goes back, I don't know if this is what Howard Marks meant, but back in 1999, you would see, even 1998, you see a company doubling, tripling, quintupling their market cap in a day. That's not happening. Yes, there's big moves like 2 or 3% in a day, maybe 5 or 6%, but it's gradual. And there's mean reversion. There's nothing like what we saw before. Now let's talk about the other problem. Many problems in this video. This is the debt overhang. Our debt is now $38.047 trillion. And again, it added $1 trillion in a few weeks from 37 trillion. And we also have, I think, about 9.5 trillion maturing. This is a key part of the next 12 to 18 months, which means unless they bring the rates down, deficits are going to explode, which means debt's going to explode, which means everything's going to explode. Money printing will happen, the QE and all that type of stuff. So the Fed has to cut rates more just like other central banks around the world, which would be great for risk on assets. And then how unsustainable the debt is. This is actually a government agency, I think. It's a joint economic committee on economic stuff, I guess. But there's a U.S. debt record high, U.S. national debt reached a new record high. It took only 71 days to add $1 trillion, and it is insane. Even with the government shutdown, our current level of deficit spending is unsustainable. Absolutely unsustainable. It's what Ray Dalio has been screaming about for years. Something's going to break. It's going to be nasty. Nasty. So rates have to continue to come down, which is more fuel to the fire for the AI revolution and will allow even larger multiples. Mad. Now, there is a problem. You've got to be aware of this. If Jerome Powell decides all of a sudden, I want to get to my unicorn magical 2% inflation, he's going to have to jack rates. If he jacks rates, that could wipe out 10% of the stock market, AI funding, so much more. It could destroy everything else and cascade into a massive market collapse. So we are heavily leveraged, especially in the AI build-out that's going to take the next 5 years. The electric energy system build-out, again, all that type of stuff, all the GPUs, all the stuff that Nvidia is selling, all the stuff that companies are building like Tesla and others, that Tesla's not rate sensitive because they have no debt, but companies with debt are. So they need the rates to come down big time. If they don't, we're in trouble. And then rate cuts again. Jerome did cut the rates again today. He did say QT is ending December 1st, but he also said labor market is bad and inflation is bad. So it's all bad. But the key here is we're moving into QE. When QT ends, we go to quantitative easing, which is cheap money plus AI plus crypto equals an explosive rally. So again, another reason why there can't be a bubble. Rates are coming down, money printing is coming, and we have revolutions happening across crypto and AI, which are, by the way, the only two narratives I've been talking about since the very beginning of this channel. So let's try to put a couple of different pieces together. And I did warn you, this would be a complex tapestry, but you've got to really think about all the different angles here to wrap your head around this problem. There are three things that I think are very important about this AI stake, high stake bet. First of all, there's extreme wealth concentration. The top 10% of investors own 93% of the stock market. This is not good. But if there is a big correction, it could eliminate $27 trillion of wealth. So we've seen wealth, anybody who's invested from watching this channel, you've seen your wealth explode. But if there is a big correction, you could get a big haircut. So start playing it safe. Start taking some of your chips off the table, perhaps. A big correction could loom, people believe, if this AI thing is a bubble. I don't think it is yet. I think there are select bubbles in different places. And the AI economic bet, 68 trillion has been bet on AI's ability to rapidly transform productivity and economics around the world. Will it work? Answer is absolutely. Things like FSD have been solved. Cars can drive themselves. That in turn generates a huge amount of wealth. It opens up a whole new world. You know, I might decide to go from San Francisco to San Jose for dinner. I'd never do that before because I hate driving, but now I can get a car and go there cheap. And who knows? I'm still not going to do that, but just a hypothetical example. And other thing that regarding the wealth concentration that is very important and why you need to be an investor. You can see here how the top 1%, their gains dwarf those of low and middle income households. And why? The reason is the top earners benefit from capital income from their investments, which grows far, far faster than wages. Just pull up a chart of Nvidia or Tesla over the last 12 months or 18 months or 3 years or whatever. You'll see. Is your salary growing that fast? No. Will it ever? No. In short, wealth builds on wealth, the miracle of compounding. And that over decades has tilted the top 1% to compound their gains at a much higher rate and others stagnate. This is why you need to be a capital allocator, everybody. Now, before I get to the summary, a couple of other little juicy things you need to be aware of in this AI revolution. First of all, is AI in control? Is this hype? Or is it hegemony? I believe the latter. I believe hegemony. AI fuels everything right now. The Mag 7 fuels everything right now. Indices are dominated by these firms. No ifs, ands, or buts. And the labor market is impacted because automation, AI, is cutting jobs. It's driving the no hire trend, which is brutal out there. So start, positioning yourself for things that aren't impacted by these AI jobs. And future scenarios, AI success or failure will define the economy. And the question you have to ask yourselves, is it going to grow the pie? Is it going to create that abundance? Is it going to make things more effective, more efficient, like transport, like thinking? The answer is yes, it absolutely will. It already is. This is a guy, I think, from Kleiner Perkins, and he had a little video, and he said, basically, we're going from making something scarce to making it abundant. Maybe Brett Taylor, I'm not sure, but he said, just like electricity replaced muscle, AI is replacing mental effort quietly everywhere. And once intelligence is everywhere, the bottleneck becomes ideas, not access. And scarcity will make intelligence exclusive. No, scarcity made intelligence exclusive, but now it's disposable. And remember, the key part here is probably about the ideas. You need to be creative. You need to think up new ideas. If you have new ideas, you can have your AI do the heavy lifting. But if you don't have any new ideas, you can't really benefit. So think very carefully about your new ideas as well. And again, generate ideas into flourishing businesses by using AI at your fingertips, which now costs nothing. So, conclusion of this long-winded story, Buffett indicator, record overvaluation, but I believe it's BS. It's outdated. All the models are broken. AI hype may justify valuations, but there are definitely bubbles out there somewhere. You can look at some of the energy companies with extreme debt, 3 times debt to cash, no sign of profitability for years and years to come. They are bubbles, but maybe the infinite demand will make it, but I don't think so. So there will be bubbles along the way. Like there's always a recession at any given time in the world. And debt and labor stress heightens risk. Absolutely true. AI, keep a close eye on it. It could flip fast, but stay with the winners in this AI revolution. The companies that have lots of cash, the companies that have huge roadmaps for the future, the companies that spin off tons of free cash flow and have PE ratios that are positive. That's where you need to play. Think Tesla, think Nvidia, safe bets. That's what I'm betting on anyway. And those 2 assets are now make up a majority of my portfolio. Hope you enjoy the show, everybody. Thank you all for coming. Big shout out to our mods again. And thank you to Wagabond, Joe Biden, DK, AR Ron, Buckhorn, DBF 430, Solstride, Ragnar, Nanglebax. And somebody back, by the way, said in the comments of my video yesterday, please, I've left crypto. I don't want to hear more about crypto. Tell us more about AI. So this is for you. So thank you to it. Thank you, Shawnee. And the Foodie Emperor is here too. And I didn't see T&A Tesla. Are you there? Hopefully. Anyway, and thank you, K8, as well, for everything. Have a good night, everybody. Let me know if this was too hard hitting, or if it made sense, or if you believe it's a bubble or not. I'm interested. Thank you. Bye.